We're showing people we're getting solid returns that are outpacing inflation. And that's really kind of the hybrid, because what happens is if you invest in the stock market, sure, you're going to have some really great years, but you're also taking the risk of those ups and downs, dealing with the economy, dealing with what's going on in politics these days, what's going on in foreign situations, whether it's what's been going on in the Gaza Strip or the Ukraine or anything of that nature. Those things do affect the bottom line in the economy and the stock market. If you invest in this product, life settlements, it doesn't, because again, you're owning a small portion of somebody's life insurance. If you own a portion of John Smith's life insurance, who's 80 years old, who say lives in New Jersey, what's going on in Gaza, what's going on in Ukraine, the economy does not have effect there. So that is why people come to us to invest with us, because they feel they're getting a nice blend of not dealing with those outside influences and those types of risks, while at the same time getting a much higher return usually than they would see if they just decide to park their money someplace in a low returning CD or annuity. Hello and welcome to another episode of Truly Diversified. Thank you so much for joining us today. Today I want to focus on one of the biggest areas that I deal with when I'm talking to people and educating them on life settlements. If you're not familiar how life settlements work, you can go back to previous episodes. I'll give you a little quick snippet here on how they work. Also, you can go to the website lifeassetllc.com. If you click on the link tree there, you'll see we have ebooks, brochures, webinars that explain exactly the process of why investing in this works, why people like Warren Buffett and a lot of large financial institutions have been dumping money into this sector for decades, and how now we're able to bring it to average investors like yourself. Today's episode is really about when I sit down with people, because 99% of the people that I talk to have never heard of investing in life settlements. So the first thing they ask is, how is this legal? How is this possible? It sounds just, quote, too good to be true. So I want to break this down. First, let's walk through what a life settlement is. We'll walk you through this. Essentially what happens is somebody who's maybe 75, 80, 85 years old has, let's say, a permanent life insurance policy worth $1 million. Now, people don't realize that they have to pay premiums, just like you pay premiums on your car insurance. They have to pay premiums on these every year. And for somebody who's, say, 80 years old, with a $1 million life insurance policy, those premiums could be anywhere between $30,000 to $50,000 a year. So imagine if they lived another 5-6 years, they might have to dump in another $300,000 to keep this thing alive. If they have end of life care needs in their situation, they might look at this and go, I don't want to pay another $300,000 or $400,000 to keep this thing alive. So they decide to sell it off on the open market. We are one of those companies there that actually buy them. It's how Warren Buffett buys them. It's how private investors, large financial institutions buy them. So we're brought an offer, we look it over, and then decide to make an offer. We might offer $300,000, let's say, for that $1 million policy. So $300,000 is given to, John Smith, 80-year-old, on $1 million life insurance policy, and then our company then deals with the premiums going forward. Okay, so that's how that works. The investors with us, what we do is we don't just buy one policy. We usually buy 5 or 6 at a time. There's a reason for that. We want the clients to be well diversified, hence the show, Truly Diversified, so that they're owning just small bits and pieces on multiple policies. And of course, they can use their IRA money or they can use cash as well. So Roth IRA, IRAs, old 401ks, about 70% of our clients actually use retirement funds here. So that's how it works. Now, when those people pass away, or as we in this industry say, have matured, and in this year, I've been involved in 3 maturities this year for millions of dollars. To give you an idea on them, we had Barry Neal on here. Go review that episode from a couple weeks ago. His company, Equilife, has had 3 policies mature this year where clients made over 10% APR, 12.5% APR, and up to 20% APR, all with no stock market risk. Okay, so that's why people are taking a segment of their money, taking it out of the market or moving it away from low returns, say in CDs or money market accounts or annuities, something of that nature. And they're coming to us because what we're offering them is twofold. One, there is no stock market risk. It is not affected by the economy. It is not affected by outside influences because you're essentially owning a portion of somebody's life insurance. It's that simple. The other reason is that we're showing people we're getting solid returns that are outpacing inflation. And that's really kind of the hybrid, because what happens is if you invest in the stock market, sure, you're going to have some really great years, but you're also taking the risk of those ups and downs, dealing with the economy, dealing with what's going on in politics these days, what's going on in foreign situations, whether it's what's been going on in the Gaza Strip or the Ukraine or anything of that nature. Those things do affect the bottom line in the economy and the stock market. If you invest in this product, life settlements, it doesn't, because again, you're owning a small portion of somebody's life insurance. If you own a portion of John Smith's life insurance, who's 80 years old, who say lives in New Jersey, what's going on in Gaza, what's going on in Ukraine, the economy does not have effect there. So that is why people come to us to invest with us, because they feel they're getting a nice blend of not dealing with those outside influences and those types of risks, while at the same time getting a much higher return usually than they would see if they just decided to park their money someplace in a low returning CD or annuity. All right. Now, even though I present this here on this podcast, I do a lot of speaking engagements, I will sit down with people and the first thing they'll say is, why have I never heard of this before? And the reason you've never heard of it before is because until just recent years, maybe the last decade, the only type of people who ever bought this type of investment, a life settlement, were the ultra wealthy. Because the way they go about it, the way that Warren Buffett goes about it is he doesn't just deal with one policy. He's buying a lot of policies all at one point, right? So imagine somebody who's worth $100 million, $500 million, or $1 billion. They can go out and buy tons of policies. I mean, I just explained on $1 million policy, he might pay $300,000. Imagine he could buy 100 policies for $30 million. For you and I, that's just mind-blowing, but for him, it's a drop in the bucket. So you had to kind of be an ultra-wealthy person to be able to buy out these policies and also have the knowledge of what you're doing over the decades. We're talking decades and decades. I mean, go back a century. This people have bought other people's life insurance. Now, what happened is some state laws changed, like let's say in California in the early 2000s, that allowed people to buy what's called fractional life settlements, which is really what we're talking about here, where you're buying fractions of multiple policies. And that is followed through in other states. And now nationwide, we are bringing it to you as the average investor. So there's not a lot of opportunity out there for you to invest in this. There's not like 1,000 companies or 100 companies that I'm aware of. I just know a few niche companies like ours that do this. I've been in this business for over the past 3 decades. So I'm very well versed in how this works. So you have to deal with somebody who's an expert in the field, understands what's going on, not just a salesman, somebody who literally has dedicated their whole life to this process. So when someone says, is it too good to be true? As in, because they don't know about it, they've never heard about it, therefore it has to be too good to be true because they've heard about real estate investments. They've heard about stock, obviously. They've obviously probably heard even about precious metals and things of that nature. This is a completely foreign concept. Just because you've never heard of it doesn't mean it's not real. There was a study done by the London School of Business, I think about 15 years ago, that looked at, how has the ultra wealthy done in this investment? And it came back that they were averaging about 12% a year. Right? So think about that. That's exactly what you want to do with this product. You want to find a way to hedge against market loss, put it in something that has not correlated to all those outward influences, and at the same time make a strong return. And that's exactly what these ultra wealthy people have been doing according to this study. They're making double-digit returns without exposing that money to the market, the economy, and things of that nature. Okay, so that proves right there that the ultra wealthy have been doing this for a long time. The message just hasn't gone out there enough to the average investor because there hasn't been opportunity and there's not a lot of people like myself out there that can help you go out there and buy those policies. So that's the first thing. The reason you haven't heard about it is because there aren't national commercials and the large institutions, the Schwabs and all those types of people, Fidelity, they're not offering this product. Okay. So it's a very niche product. It's something that the ultra wealthy kind of kept to themselves for decades. And now we're finally bringing it to you to explain to you how this works, right? So that's the first thing of that. It's not too good to be true. Okay, we cover a lot of content on here, and I'm always asked this important question. Where do I start? What is a good first step? Well, if you're looking for a way to diversify your retirement away from market volatility and still get competitive returns, I want you to watch this free on-demand training. In under 30 minutes, I will walk you through the exact strategy that smart and wealthy investors like Warren Buffett have used for decades, and they do it by investing in what's called life settlements. We'll break down how this works, real case studies, and how you can add this market-independent asset class to your portfolio without having to lock it up for 10 to 15 years in some low-performing annuity. You will learn how to build stable, predictable growth and, yes, get true diversification, especially in today's uncertain environment. All you have to do is go to lifeassetllc.com/webinar. Again, that is lifeassetllc.com/webinar, or you can click on the link below here and watch it now. It is completely free, and I think you'll find it will be a game changer on how you think about investing for your retirement. Okay, now let's get back to the show. The second part people ask is this legal? Is this actually legal? It sounds kind of seedy. And I've heard this story on Dateline about this, that, and the other. And somebody bought somebody's policy and, did something. Okay, completely different subject, folks. Here's the deal. The Supreme Court in 1911 ruled in a case called Grigsby versus Russell that a person is allowed to sell their own policy as an asset, just as they are able to sell their car or sell their house. But within those rules, you have to make sure that you do it legitimately. Okay. So the first thing that works is what's called 2-year contestability, meaning that if I met somebody on the street and they said they wanted to sell their policy to me, right? They have to have had held that policy for at least 2 years. Why is that a rule? Because what they don't want to have happen is something called Stoli, which is stranger transacted offer of life insurance. Just like the vodka, Stoli. You can look it up. The issue there is, think about this scam. Where the scam can come into this business is that I could sit down with somebody that I know's family doesn't have a deep history and they don't have a lot of money. I can go to that person and say, hey, let's buy a large life insurance policy on you, and then you make me the owner right away. And I'm going to pay you, say, $10,000 or $20,000 to go get that policy, even though you have no intention of owning the policy. It's not really protecting anything for you or your family. I'm just using you as a type of vehicle to make money. I compensate you for it. I pay the premiums, and no disrespect, I hope you drop dead in the next couple years. Okay. Well, that sounds super shady because it is. It's illegal. It's called Stoli. You can't do it. This is not what we're talking about in our business. And that's why 2-year contestability has to come in. There has to be a track record of the insured that is selling that policy to us, of when they bought it and why they bought it. Most of the people that we buy policies from, these policies have been on the books for decades. Meaning, let's look at it. If John Smith sells his insurance policy to us at 80, most likely he bought that policy 20, 30, maybe even 40 years ago. And why did he buy that policy? He bought it for protection for his family. He had kids, wanted to make sure if he died unexpectedly, that his family would have money to take care of the mortgage and usually take care of those kids' educations. Fast forward 40 years later, he's 80 years old. His kids are 55 years old. They own their own house. They're independent. They don't rely on him anymore. It's not protecting anyone, and he has end-of-life care needs. So what does he do? He sells it off to get money back. He's going to take that $300,000 today to have a good quality of end of life because A, he doesn't need the $1 million when he's dead. It's not going to go anywhere except for his kids who really don't need it. And number two, he's going to be paying $40,000, $50,000 a year to keep this thing going, which is not money he really has sitting around to keep paying for something that's not benefiting him while he's alive. Okay. So It is legal based on the Supreme Court ruling if you do it correct. Number one, right, again, is you have to deal with the 2-year contestability. Number two is we encourage people to work with companies like ours that are regulated, right? If you just go out there, there's nothing that stops you to going out there and trying to buy a policy yourself, but that's dangerous. The reason being is you don't know how certain policies works. Look, there are a ton of different life insurance policies out there. There's term, which we would never buy. If you understand, a term policy will just end after a certain period of time. Then there's different types of policies, universal life, which is what we usually deal with. There's index universal life, and then there's also variable universal life. You have to make sure that these policies don't have traps in them or some kind of area where it's going to blow up 20, 30, 40 years from now. So we have an independent company we hire to scrub through all of these policies to make sure that they are great policies for investors down the road, not just now when you're buying them, but later on the road when they just are continuing to go on. Okay. So the first thing here is, yes, it's legal. We've proven it's legal, but there are also parameters which absolutely safeguard you as the investor. Number one is that there needs to be a 2-year contestability clause to make sure this person bought the policy originally for what it was intended, right? And number two is you want to make sure that the policies are decent policies that are not going to have some kind of catch-all in them later on, 10, 20 years down the line, where the policy could actually implode on itself. What I mean by that, it's kind of to make everyone at home. It's like a mortgage. You want to make sure you have a policy that's got the 30-year mortgage, not something that's a 2-year arm that where the rates could go up. And that's where we are experts in this field to make sure that we find the best policies for our client base. So that's how it works. We wanted to talk to you about this, and those are the reasons that it is a decent product. It is not too good to be true. And just because you're not educated on it or have never heard about it from anyone else doesn't mean that it's not too good to be true, right? So if you go to our website again, lifeassetllc.com, you will see a link tree on there. I want you to click on that link tree. On that link tree, you will see the brochure, the offer, but most important is that I've written an ebook that is a great depth of knowledge for you to understand how this works. And also we have a webinar on there that you can watch at any time. And also there's also our podcast episodes to go back and review on there. Of course, they're on here as well, but you're going to find a plethora of information on there. And the reason we do that is that we want to be transparent to you, the listener, so that you can understand what we're doing. And we want to give you the education in your hands so you can see what it is there. Obviously, from that point, if it's something you're interested in, there's a booking area on there that you could book a consultation to actually talk to me. You're not going to find some person somewhere else. You will deal directly with me because this is a niche product, and it's not like we have a sales staff of 30 people who are going to talk to you. The reason is that they're not knowledgeable on this. This takes years and years of experience in this industry to know what you're looking at. And that's why you will deal directly with me. So again, is it too good to be true? No, it's not. And we have the website, again, lifeassetllc.com, that you can look through to show you that this is a real investment. We do have clients that have continually made decent returns without stock market risk. And we're fully transparent about that. So again, just want to give you kind of food for thought today. If you've ever seen it or ever heard of this or been watching our show on YouTube or listening to this going, yeah, I don't know, it just sounds too good to be true. Do your research. We give you the research at lifeassetllc.com. And we appreciate your time today, and tune in next time for our next show. Again, I'm the host, Ben Mohr, and this is Truly Diversified.